Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Christine Outram of Everydae coming to us from Los Angeles. How's it going?
Pretty good. Thank you, Nathan. How are you doing?
Pretty good. This is, to put a timestamp on it, this is like week 6 or so of shelter in place. I assume that's about the same timeline for you too.
It is, yeah. Thankfully, I mean, I have family all over the world. You can probably hear I'm Australian, but you know, have lived in LA for many, many years. But we have family all over the world, and thankfully everybody's safe. So that's great. But it is extending the amount of time.
Australia's relatively hard hit, right? Or medium. I guess not like some countries, but I mean, it's got a pretty good virus, has a good presence there, doesn't it?
Yeah, I mean, Australia did do kind of stay in place orders fairly early. So it hasn't been as bad as other countries. We're also a much smaller population.
Yeah.
So, you know, just 26 million people or thereabouts. So yeah.
I listen to, on my iPhone, I listen to Triple J on the streaming app all the time. And I love it. It's fun to just hear. It's a lot of Australian music, but also just their news breaks and stuff. It's kind of fun to hear like a totally different perspective. So anyway, I'm kind of following along with what's going on in Australia via Triple J.
Triple J, for those who don't know, and are in the US, it's kind of like the NPR of Australia. A lot of kind of great new music and you know, kind of news. So yeah.
That's fun. Okay, great. Well, what is Everydae? Tell us what you do.
Sure. Well, I think it's probably important to start with the problem that we're solving. We know that most high school students need help getting from 9th to 12th grade and then up into college or career. But unfortunately, tutoring and supplemental education these days is prohibitively expensive. So only about 15% of families can actually afford access to this privilege, which is creating this ever widening gap between the haves and the have-nots. And so we wanted to do something about that. At Everydae, we're giving everyone a digital tutor so that high school students can ace their classes, prepare for college, all through these fun 10-minute micro lessons that adapt based on their personal needs and goals and their strengths and their weaknesses. And unlike traditional tutoring, which is, you know, $75 an hour and up, we're $19 a month. Okay.
And so it's, just so I totally understand, like the form factor, it's not live tutors or a tutor marketplace, it's video lessons and lectures and stuff, or what?
Yeah, that's correct. So what we do is we take a course and we break it up into micro skills. Then those micro skills are weighted based on how important they are to that course, how fundamental they are to other skills, and also based on kind of what you want your performance to be. So let's take the SAT as an example. You might want a perfect score on the SAT. That means that you need to know all about micro skills and do really well on them. But if you're already looking for like a 1500 or something like that, you know, you don't need to get into a top school. It turns out that you actually only need to know half the micro skills in SAT to get a 1500. So we're able to create a personalized journey for you that keeps on adapting as you study, so that you can maximize your improvement in the minimum amount of time.
Interesting. Huh. Does it get harder the more you progress? I'm almost thinking like I had to take the GMAT a million years ago, and I think the test gets harder the more you get right or something like that.
It does. Yeah. Our background is GMAT actually. And so a lot of the item response theory is what it's called. A lot of the item response theory that was built into the GMAT, we're starting to kind of look into building into SAT practice as well. The SAT exam itself is not adaptive, but we believe that adaptive prep can actually help students achieve faster and, you know, in a more kind of fun way by breaking everything into 10-minute bite-sized pieces that suit teenage attention spans and quite frankly adult attention spans too. Nobody wants to spend 90 minutes cramming for an exam, you know, once a week. So yeah.
I took the CFA exam, which is a 3-year exam.
Yes.
And every spring we had this ritual where for January till June, I'd lock myself at a coffee shop like 2 days a week for 4 hours just studying for that. I don't think I could do that today. My attention span is like a quarter or a tenth of what it was, back then. So I'm glad I don't have to do that now.
We're all like that. I think we're all kind of, have shorter attention spans. So yeah.
Beyond the SAT, what's the most popular course?
We're actually starting with SAT. I'm happy to kind of give a background on the company and where we got to as well. Starting with SAT, and that's what we've launched today. But the goal is to really be your digital assistant throughout high school. So expanding into advanced placement classes, and then down into what we call the freshman fundamentals. So for middle schoolers kind of coming into high school, how do we get them prepared with the base level things they need to know to succeed over time?
What were you doing before? Were you a tutor or what?
I wasn't, no. My special skill is product design and tech. So the majority of our team actually came from another test prep company called Veritas Prep.
Okay.
In fact, our chairman, Chad Troutwine, was the founder of Veritas Prep. He founded it in 2002. He didn't know it then, but Veritas Prep would go on to be the largest privately owned test prep admissions consulting company in the world. I joined Veritas Prep as their chief product officer.
Okay.
And Veritas Prep had always done in-person classes and some live online classes with tutors and things like that. But we really saw an opportunity to do something that was self-directed and to use technology and all of the information we'd gathered from students to create an adaptive learning platform. So we did that for the GMAT. And then in 2018, Veritas Prep was sold. But there was one piece of the business we didn't sell, and that was the adaptive technology that we'd started to develop. So we took that and spun out a new company. We took one of the directors of academics with us, who has this incredible background, working at some of the major names in test prep. We took Veritas Prep's best salesperson ever, and he formed part of the team too. And then Chad, the former CEO of Veritas Prep, stepped into chairman role, and I stepped into the CEO role.
Okay, cool. And so how did you fund this in the early days? Was it,
Yeah, so I'd say we're closer to what people are calling a venture studio model these days. So Chad actually has funded the business. We took the view that we really wanted to form a world-class team, and that was going to require some capital upfront before we even built anything. We had the history from Veritas Prep of building adaptive learning products, so we already had that on our side. But Chad kind of came in and has funded the first part of the business entirely.
Okay. And so have you raised any outside capital yet, or just totally internally funded?
We have. So we actually ended up taking the equity crowdfunding route.
Okay.
And we're currently just at the tail end of our equity crowdfunding campaign. It closes next week. And we've just gone over the $600,000 mark. So
awesome.
Yeah.
Congrats. Well, we'll point to that. It's on WeFunder, right?
That's correct. Yeah.
So a couple questions. We can take these and break it apart. First of all, why crowdfunding versus angel VC, and then why WeFunder? But let's take that first question first. Sure.
So we did actually go the VC route, and we started taking meetings last summer, I would say it was. This is when we just decided to pivot from GMAT to the SAT. We had an early pilot of what we wanted to do with the SAT, but hadn't actually built out the beta yet, and took a lot of great meetings. But we also got something which is, I'm sure founders have heard a lot, which is come back to us in 6 months when you have more data and you've launched the product and you have more students, et cetera, et cetera. So I'd say that was, great relationship building, but unfortunately it didn't end up with any deals. We were just kind of in that weird spot of, we weren't so early that we could just sell on the vision. We had kind of a pilot going, but we also went far enough along to, show that we had the traction. And I think that's a lesson learned as well, that if I was doing it again, I probably would have just started taking meetings back last January.
When you could just sell on vision, kind of?
Sell on vision, and even if the vision part didn't result in a term sheet, at least we're building that continuity and building those relationships with key investors early on. One of the things, I had some contacts with investors from previous companies, so we were able to utilize those for introductions, but they were also in different industry and weren't as focused on edtech. So people didn't really know us when we were first taking those meetings, and trust is so essential to closing the deal, trust and continuity of like knowing who you are. So yeah, if I went back again, probably do earlier meetings.
Mm-hmm. Do you feel like you went through a full like fundraising attempt before deciding to go to crowdfunding, or you were just getting some signals that said you weren't quite ready?
No, we had the full pipeline running.
Yeah. Mm-hmm.
So we really did our due diligence on who we wanted to target, in a spreadsheet, exactly who we wanted to get to, using LinkedIn in order to kind of outreach to the people in our network to get those warm introductions. And we had a great hit rate for getting meetings. We had a fantastic deck, and, we have a big vision. We really want to be the digital tutor for every student in the world. And that's a big market, especially when you think about people who can't afford traditional tutoring. So that was captivating. And we had the team, we had the tech, but what we didn't have was just the proof. So we went through the entire process, I would say, but kind of got to a point where we're like, you know what, let's kind of look at some other alternatives here. And
so how did you settle on crowdfunding? I mean, there are maybe not that many other alternatives, but like, how did you kind of arrive at, let's go do a crowdfunding campaign?
So Chad, our chairman, is actually an investor in another company called the Aurora Project. Okay. And they specialize in helping companies architect their crowdfunding campaigns, whether that's Indiegogo or whether it's, equity crowdfunding. And we just got talking, and it seemed like a fantastic opportunity. He really thought we had something that would resonate with the investors who usually invest in crowdfunding campaigns. And I started to kind of see it as a strategy. Mm-hmm. I think one of the advantages of crowdfunding is you're building a network of passionate supporters across the world, not even across the US, but across the world. And what I've found through this crowdfunding campaign is that's opened up all these sales channels that I never would have thought about. I'll just give you an example. We fairly early on in our campaign got contacted by a pastor in Virginia, Pastor Greg, who just loves what we're doing, loves the kind of accessibility and democratizing education aspect of what we're doing, and really has kind of become an unofficial spokesperson for getting Everydae sold through the churches and the church groups that he belongs to. So back to kind of the congregation and giving people access to it that way. So that's incredible. I mean, we've also had a number of investors across the world who are former educators or who want to have us expand into standardized tests in their country. So just all of these little networks and little relationships with people.
And how did you decide on WeFunder? I don't even know the landscape. I know there's quite a few platforms out there. So why them?
We've decided with WeFunder because we was recommended through Krishan and the team. They'd worked with them before, and we had an initial conversation with them, and we felt that their terms were very reasonable compared with some of the other competitors out there. And they just know what they're doing. They've been around for a long time. So I think they were founded they were one of the first equity crowdfunding sites founded. And so they have a lot of investors, and through the years have also kind of built up that email list of people who are investing as well. So that became quite enticing. And to be honest, working with them has been fantastic. We have a dedicated account manager who helps us, keeps an eye on everything that's happening, but has also kind of helped us craft the narrative and the story. And then throughout the campaign, their team has been weighing in on what we can do to get more funding.
I think there's I don't know, people ask me about crowdfunding. I often will say it's great for some consumer products. And I think there's a perception that you sort of have to bring your own audience or bring your own set of investors to it. Do you think that's reality? Or, how much? I think there's also this other side of the mythology that you just put up a splashy page and investors kind of flock to you. Maybe.
I wish that was the case.
Talk about the nitty gritty. Yeah. What do you think?
It was interesting doing back to back, doing the VC route for like 3-4 months full time, and then kind of going and doing crowdfunding full time, because it is equally a full-time job.
Yeah. Mm-hmm.
It's not a set it and forget it process. And it's a game of getting as many eyeballs to your page as possible. So we have a dedicated marketing budget that is just around ads to tell people that we're raising. We put in the beginning about $150 a day into that, but we're really ramping up towards the end. We're looking at putting $1,000 a day or more during these last
Facebook and AdWords, or where are you spreading that money?
Facebook and Instagram.
Mm-hmm.
Yeah, that's where we're spending that money, and we're seeing a return, which is fantastic. Our return on ad spend is great. So that's working, and so we feel like it's beneficial to keep that happening.
Yeah.
The other major thing that I learned is you have to have almost like a social media calendar. You have like a crowdfunding calendar. You're putting when am I going to do updates, when am I going to do tweets, who can I get press from, because press shows the kind of validation. I reached out to a number of podcasts, a number of press outlets, and also started to form partnerships with some of the angel investing groups that are out there. One thing to note though is that it was less the traditional angel investing groups that we formed partnerships with. So, less of the kind of Tech Coast Angels or some of the kind of more well-known names in VC, and more these new networks of mom and pop angel investors.
Like what? I'm not familiar with that.
Yeah. So, do you know Neil Patel? He's a marketer. Mm-hmm. So he has a group called the Angels and Entrepreneurs Group. And it's essentially for people who want to get involved in early stage startups and want to invest, but don't necessarily have the capital that a more full-time angel investor would, or traditional angel investor would. So Neil and the team have a network of over 70,000 of these people. They actually vet deals, and they kind of look at the landscape, particularly in equity crowdfunding, and they recommend companies to their network of 70,000 people. This might be someone who owns, their own plumbing business in Idaho, or, somebody in West Virginia who just, has made a little money and wants to kind of invest in startups. And so
is that group a website, or it's his own like private spreadsheet or something, or is it on LinkedIn, or where is that group?
It's a website, and people actually, they subscribe to Neil and the deal flow.
Oh, interesting.
Yes. There's several others that are popping up like this as well. So another one is Startup Camp, startupcamp.com. Chris Graby over there, who's fantastic. He also has a network and has a subscription service where angel investors can get access to angel insights and different deals that are coming through. So yeah, there's a number of these popping up that are not necessarily the traditional VC world, which I found was fascinating.
With these, there's so much to unpack here. With these sites like Neil Patel's or Startup Camp, do you guys have to pay them, or is it something you apply to, or what?
Yeah, it is something you apply to. They do vet you.
Yeah.
They're looking for obviously deals that they think will resonate with their network, but B, that are sound. They're obviously not going to want to recommend someone who they don't think has potential. So there is a vetting process to go through with both of them.
Got it. And then they just put you out in a newsletter or on the site or something like that.
We have our own profile on the site. And then there's a video interview where, they kind of ask questions about the business. There's kind of a take. In Neil's case, he does a kind of a Neil's take. He kind of talks about some of the questions or unanswered things that he has. And then there's an internal forum as well. So people can ask me questions and ask about the business to kind of get more information too, so that they can do their own vetting of the deal.
Interesting. So this is great. So how much of, this might be a hard question to answer, but I'll throw it out there. You can skip it if you want to. Of the 600K committed, how much do you think came from WeFunder's database versus some of these other sites lists versus your social media? Do you have any rough pie chart?
Not a final pie chart, but I can tell you, we do see massive spikes when, for instance, Startup Camp or Neil puts out an email to their network. So, we saw kind of an extra 100K come in within 2 days.
Wow.
When Neil, did a shout out for us. I will say on my side, I'm also architecting that as well a little bit. So we have a $500 minimum.
Okay.
But we know that actually a lot of mom and pop investors across the US, that's just a little too high.
Mm.
So we would do these limited time offers where we drop the minimum to $250.
Mm.
That gets as many people in, but because the limited time offer is going to run out, then, you know, it's kind of that FOMO effect and we get many more investors in as well. So we've run those a couple of times throughout the campaign. The other thing I will say to you is it's crucial that on day one of the campaign, you open with already money invested.
Mm-hmm.
So we actually did 120,000 just from our family and friends that we got committed before we actually went live with the WeFunder campaign.
Yeah, I've heard that. That's interesting. So you kind of got all these commitments by, you know, offline, so to speak, from family and friends. And so day one, like, boom, we already have 120K.
Yeah,
That's
that's
interesting. Right. So the 600K, that's spread across how many, do you have an idea of how many people that's involving? Yeah.
It's close to 1,000 right now. Yeah, close to 1,000 individual investors.
Yeah.
Ranging from, you know, kind of up to 50K down to $250.
When you've heard the show, I usually talk about, like, what's your funnel look like, and a lot of angels, you know, people raising angel to be, we talked to 200 angels and we ended up with 15 or 20. You've got 1,000 investors. What do you think the top of your funnel look like? I mean, have you reached 100,000 people to get 1,000 investors, or any sense of that? I know that's also a hard question.
That's an amazing question, and it makes me want to go back and look at our numbers. I don't have a sense right now. I think we'd have to think about the reach both on our ads, but then also kind of, you know, the networks we're reaching with these partnerships, like, not partnerships, but, you know, kind of relationships with Startup Camp and Neil and everybody.
Yeah.
Yeah, it's hard to say, but it would be an interesting number to crunch.
It would be. If you ever do that, let me know.
I will.
Add
Yeah.
a note to the notes. On the marketing, the social media marketing and buying ads, you're up to, you know, $1,000 a day-ish. Are you allowed to, you're not as, I don't want to put you in like an attorney role, but are you allowed to, like, publicly advertise an investment campaign? Aren't there some restrictions on that?
There are definitely restrictions.
Mm-hmm.
Yes. There are certain things you are not able to mention in the ad itself. These are SEC requirements.
Yeah.
You're not able to put the terms of the deal in the ad itself. You really can drum up interest by talking about the company's success, but then it's the learn more button that takes them to the WeFunder campaign, because that's where all the information is. And, you know, the SEC has been quite careful about requiring that investors have access to all of the information before they make that choice, particularly because it's open to unaccredited investors. You know, you don't have to be an accredited investor to do equity crowdfunding. Yeah.
Are you able to, it almost seems like targeting parents, teachers. I don't know if teachers have a lot of money to invest, but maybe, you know, other people in the education space, are they likely investor candidates for you?
They are. So we have a couple of different audiences running. Probably the best performing audience is real estate investors.
Oh, why?
I just think they have a risk profile where they're looking for deals and they're looking for, you know, for opportunities, quite frankly. And particularly right now where, you know, a lot of real estate deals are not going through, or people are kind of watching the market, or, you know, saving a bit of their money until kind of, you know, prices drop. They're open to other deals and open to kind of other places to put their money.
Have you seen, so two-part question, have you seen your business spike because of COVID, and have you seen investors slow down or accelerate during COVID? Like, you know,
we saw in March compared to February, we saw an 839% increase in registered users.
Wow.
It was crazy. It still is crazy, to be honest. We're getting a lot of people through because when schools shut, we really hustled hard to get ourselves on a lot of resource lists for teachers. We also kind of have a code that makes Everydae free for students while schools are closed. So that's kind of helped with getting people in. So yeah, we've seen an incredible uptick. In many ways, it's a lightning strike moment for us.
Your timing is crazy. Yeah.
Yeah, it's unfortunate. I don't want to capitalize on, what could be global tragedy, that kind of thing. But at the same time, so grateful to be in online learning and, kind of seeing this growth. Yeah.
That's me. Well, it's funny, as a parent of two little kids, like, oh man, when the schools got canceled, it was a mad scramble and trading lists of resources and free museum tours and all the deals and offers that all these different sites are now doing for parents. It's pretty amazing, but it was like a couple days of sorting through every resource out there. So my wife mostly did this, but she probably came across you guys at some point.
Yeah, we're probably on one of the lists that she has in her inbox. In terms of funding, it's hard to say. Anecdotally, I feel like funding on the coasts dried up. Funding in the center of the country remained for longer.
Interesting.
And I'm not really sure if that's true, but I need to go back and see where all of our investments are coming from, and see which states and also which countries, they're there. But I think there was a little bit more initial fear on the coasts around coronavirus potentially, and that, might have had an impact. But we, it's difficult to say whether it's had an overall impact. I mean, we have one thing about crowdfunding is if you're doing what we're doing, it's a cap at $1,070,000.
Okay.
CF campaign.
Mm-hmm.
So that's, we were going for the million. I think it's very likely in the next 7 days that we're going to get at least an extra 150,000. So I'd say we'll kind of go to 750, shooting for kind of 800.
Mm-hmm.
I think we would have reached the million if it hadn't been for coronavirus.
Yeah, that's interesting. I mean, it's a double-edged sword, right? It's probably helping your business growth, but it also is making investors kind of skittish, perhaps. Let's talk about a few details of this. So the cap is $1 million. Is that an SEC regulation, or is that just a thing you picked?
SEC regulation, $1,070,000. Don't know why
$70,000.
I have no idea. So that's what's called a Reg CF campaign. Then if you want to raise more money, you can do what's called a Reg A, Regulation A campaign. And I believe don't quote me on this, but I believe that's up to 10 million, possibly more. So.
Reg A is 10, something like that. Okay, interesting. And your cap is $1,070,000. Do you have to hit that? Or if you don't hit it, the money you've got pledged, you get?
So when you create your crowdfunding campaign, you put in the minimum that you want to hit. So in our case, we put 200,000. And so long as we hit that minimum, then everything above that we get. So you don't actually have to hit your maximum.
Got it. What, you can share as many specific details as you want, but what are the terms like from WeFunder? They're just getting a % of the amount raised, or is it an equity and pay cash fee, or what?
No equity, just a % of the amount raised. And yeah, as I mentioned before, their terms are good compared to their competitors as well.
Yeah. Can you share, or is it something you don't?
Yeah, 7.5%.
7.5.
Yeah.
And that's like lower than other sites? I have no basis for.
I think it's similar to other sites, but I believe some other sites also either charge you an upfront or potentially take equity. And again, I haven't kind of looked at the numbers in a while.
Yeah.
Some research last year, so I don't have the exact numbers in front of me. But yeah, I believe that that's the case. And
is it just a straight 7.5%? No other fees or upfront payments?
Just straight 7.5%.
Is the vetting, do they vet you pretty heavily?
They do, yes. I mean, they're looking for companies that, again, they believe will be doing well with their audience. And so they do kind of look pretty specifically at what your team is, what you bring to the table, the story you're telling, the opportunity, how big the market size is. So yeah, they're kind of the first line of defense.
That's interesting. Okay, great. And then for the investors, is it a predetermined equity share that they're sharing, or how's the terms on that work? Yeah.
Each company can choose their own terms. In our case, we went with what's called a crowd safe, which is a version of a safe. So we have a valuation cap, and that's, that makes it pretty simple for investors to get in. Other companies offer straight up equity. Some offer kind of, other kind of forms of debt. So, yeah.
Interesting. I can see how the advantage, like Pastor Greg, was that his name?
Yes.
Pastor Mike, Pastor Greg.
Pastor Greg.
You have this new sales channel, people supporting you. I can also see if you have 1,000 people that it might just make your life hell because they're all bugging you or complaining or, asking when they're going to get their money back. Like, do you worry about that at all?
I think it's the same as any investor relationship. It's a game of kind of contact and confidence. So, we already send out quarterly updates, but it's quite likely that I'm going to be updating people kind of, a little bit more regularly. And just showing them what we're doing and bringing them along as part of the story. I think it's more likely, and I'm getting more emails from people who want to help us than people who are complaining right now. Let's, cross our fingers that remains.
No, I think that's great. I guess, is there any, how do I phrase this? Any wall, I would go crazy if I had 1,000 people that were able to contact me and want an update. Do you have any wall up? Hey, we do these quarterly updates. This is the information flow. Or are they allowed to bug you? You know what I'm saying?
Right now they're allowed to bug me. I haven't put any wall up right now. However, I do tell people to connect with me on LinkedIn because that's where I send more frequent updates. So if they're kind of looking for additional information there. I think for a lot of people also, they're engaged. There's a certain percentage who are engaged and there are a certain percentage who are, I'm just putting $500 in this. Let's see where it goes. And, update me when you can.
Yeah, totally. Yeah. Well, I mean, all startups have, it's never just a straight up into the right path. And I'm just wondering, do crowdfunding investors, especially mom and pops, get impatient when things are going sideways or going down or, in the normal roller coaster of the journey?
I'm sure. Yeah. Because I think that, this is less sophisticated, which sounds like it's a bad thing, but they just don't have as much embedded knowledge of how startups work, the natural ups and downs of a company, kind of the growing pains as you get to hyper growth. So yeah, I do anticipate that there'll be some questions, but I see my job as a CEO to kind of confidence and communication to be, to help them kind of understand that. I think the other tricky thing, this is something we haven't talked about yet, is you definitely don't want 1,000 investors on your cap table.
Yeah.
It makes it very hard to raise your next rounds with VCs. So something that equity crowdfunding companies are now doing is that they're kind of putting that into one line on the cap table. So within this crowd safe, you don't have any voting rights. You're kind of giving your power to a proxy who can actually engage on behalf of you, the small investor. And that kind of helps lessen the fears of VCs as well as you kind of go into further rounds.
Does that proxy have a board seat or anything like that? No.
It's usually just a lead investor or one of your major investors that you trust. And they can act on behalf of everybody else.
Well, a couple more questions. I won't keep you all day. This is pretty interesting because like I mentioned before our call, you're pretty much the first crowdfunding startup we've had on this show, which sort of surprises me. How do you plan to engage this? I think one of the biggest advantages, like we talked about, is having this army of 1,000 stakeholders. How do you plan to engage them, creating more Pastor Gregs? What are you going to do?
Well, actually, first we should talk about how I've engaged them through the campaign.
Yeah, please.
So we're about to launch another one of these, but we did this thing called a Thunderclap. And I don't know if you remember the company Thunderclap. They're actually out of business now. But what they did is if you had a cause, you could sign people up to the cause. And then on a specific day at a specific time, it would automatically tweet or Facebook post on behalf of those people at exactly the same moment. So you get a big thunderclap in the social atmosphere and it's, mass engagement, everybody's seeing you everywhere. They're no longer able to do that because Facebook changed their rules about posting on behalf of everybody else. But the concept, I think, is really interesting. So one of the things we've been doing with our existing investors is saying, hey, we want you all to post at this time on this day that we're dropping our minimum to $250 so that, more people like you get an opportunity to be involved. And that kind of creates these mini spikes as well. So kind of bringing them into the process and having them kind of share the news, be proud of their investment is one way that we're involving them right now. Moving forward, something we were just talking about this morning is how do we turn people into ambassadors? How do we kind of create a referral system where we can start to perhaps give some money back to some of our most engaged investors who maybe want to sell us into a school or want to sell us through their congregation, and have kind of a win-win relationship with these people as well. So that's something we're definitely talking about. The other thing is I'm sure many founders do this when they send out their update emails, but we always at the bottom have an ask section. So like, here's what we're looking for. We're looking for people with connections to, right now, actually, we're looking for people with connections to the ADHD community. We believe our 10-minute bite-sized pieces are actually perfect for kids with shorter attention spans, and kind of, some of the things that come along.
So
with
all kids,
ADHD.
basically.
All kids. Yeah. And so we're really kind of looking to engage that community. And that's something that I could imagine asking our army of 1,000 investors.
Yeah, no, makes total sense.
Yeah.
Great. Any other tips on the marketing and sort of, I think that Thunderclap is amazing, smart. Social media is really interesting. Any other things that are really working well to sort of like drive that top of the funnel?
The drip campaigns that we did, email drip campaigns, we actually had somebody go and gather all the names of people who'd invested in other EdTech equity crowdfunding campaigns across all the other sites. So across, kind of WeFunder where we're on, but, all the other kind of sites where there were EdTech businesses, because we knew that they were already invested in this type of business. And so then this was an Upworker that we used, and she kind of got all the names, and then she got all the emails of these people, and then I started a drip campaign just to let them know about us. And it's actually, I think that's how we met Pastor Greg. I think it was through that cold email drip campaign. And yeah, he
had invested in some other ed tech startup on another.
Exactly.
That's fascinating. That's brilliant. Great. Anything else? These are good.
No, but I'm, happy to, I plan on doing a postmortem after the crowdfunding campaign is over, and just documenting everything that we did and what worked and the relationships that we kind of formed through that. So, happy to share that with you as well afterwards.
Yeah. We'd love to include that as a follow-up or post or link in the post. That'd be great. So during this campaign, do you get a lot of just dumb questions and people, asking you stupid stuff that you've got to spend your time responding to?
You do get a lot of people who are new to investing. And so, they're really not part of this world. And so they're asking questions like, how much equity do I get for $250?
Yeah.
Can I get 10%? They haven't actually said 10%, but it's those kind of questions. It's like not understanding the mechanics, or will I see my return, in 6 months or a year? And you're like, no, really it's going to take a few more years than that to build the business, and just setting expectations. But yeah, so we have a bunch of that. Probably the funniest thing that's happened though is we've had people trolling us, which is weird. Like, you would think, why would somebody fake invest in a WeFunder campaign when you have to sign up and kind of put your email through and everything else? So we had one guy we worked out he was from Florida, and he pledged $1,070,000, and we're like, I don't know that that's real.
Oh, interesting.
So it doesn't go through. Those things get flagged. Any kind of high amount gets flagged, and the WeFunder team looks into it. We had another person who, kind of invested a large amount of money, and the comment on it was like, because I'm a billionaire. Then when we looked up his name, it was the name of the head of Hezbollah. And so that was another troll who came through. I'm like, really? You've got too much time on your hands if you're trolling my WeFunder campaign.
Yeah, I was going to say, what is the motivation for that? I think maybe it's a competitor, but if it's just some random bored person in Florida, or what do you think? What's the...
I don't know. I think there's maybe something about, other people raising a lot of money, or maybe there's kind of a jealousy factor of these people who can afford to put a lot of money into these things, and kind of the rich getting richer, and so it's kind of a weird reverse troll that way. Really not sure, but
Interesting.
it got me very excited to see their investment, and then I was like, oh, they're not real.
It's Hezbollah. Yeah.
Yeah,
Would
exactly.
you take money from Hezbollah if it was legitimate? No.
No.
No. Very good. Now, are you thinking ahead? Do you think you would do another crowdfunding, or would you go back to VCs? What's the long-term fundraising path?
I'm just, once this part is over, it's fully about architecting our growth process and refining that, because that's the thing that tells us when we're ready to fundraise next. And so that's what we're concentrating on the short term. However, you have up to 12 months to raise your $1,070,000. So even though we've already raised a chunk of that, we could go back and do like another little mini round with our Reg CF and then transition into a Reg A as well. And so it's open. Either kind of we'll go that path, or we'll go back to VCs and kind of, get on the VC train. On the
VC train. Yeah. Well, that'll be interesting to see what you guys do because obviously you're having pretty good success with this crowdfunding. So it'll be interesting if and I'm trying to understand this too, is crowdfunding overtaking in some way traditional fundraising, or is it just its own separate side path? You know what I'm saying? I don't know.
I think it's a separate side path at the moment, but I think it has the potential for many businesses, but some businesses it won't work for, which makes total sense. I do see it as becoming more mainstream.
Yeah.
The law's only changed fairly recently to allow it. We're still kind of working out what that relationship is between, I have a crowd safe. Does that make it harder to raise VC? A lot of VCs are very anti-crowdfunding because in the beginning you would get 1,000 people on your cap table.
Yeah.
So there's kind of an education process as well. And I don't think we've seen that played out yet. I don't know that we have cases to point to. But probably, there's going to be more of a hybrid model out there with crowdfunding really legitimized as a way to raise for early capital.
Did your marketing efforts, did your fishing nets pull in any actual VCs or angels? I'm curious if,
Less from kind of the Silicon Valley area, more from overseas.
Interesting.
So individual investors and angel investors from overseas. In fact, I'm speaking with someone today who's interested in putting a very large check in. So we'll,
awesome.
See how that conversation goes.
All right, almost done. Anything you would do differently? You mentioned something previously, but anything you would do differently if you were starting this all over again?
Yeah, I mean, just the thing that I mentioned before about starting those relationships early. It's, people giving you money is a trust game, and some people are born with the skill to get someone to trust them in a 30-minute meeting, turn that into a sale. I feel like I'm very good at speaking with people about what we do, but I'm really best at when they see me get to work. And, when we've kind of formed that relationship over 3 months, 6 months, 9 months. And so that's the thing I would do differently, is start to just let people know what we're up to, keep them updated, form those relationships. And then that turns into something where the trust is built and the money comes through.
Yeah. Very good. So people want to learn more. It's Everydae, DAE for day.com, right?
That's right.
And you want to give the URL of the crowdfunding campaign?
WeFunder.com/Everydae.
Okay. Awesome. Well, this is actually really fun. I've learned a ton. So good luck rounding out your last. We'll try and get this out before the campaign is over. When's the end date?
April 29 at midnight EST. Yeah.
All right. Well, we'll do our best. But good luck. And
great to talk with you, Nathan.
Thank you so much. Have a good rest of your day in lockdown.
Thank you.
Stay safe.
All right.
Bye.
See you. Bye.